What's up, everyone? It's Eric coming at you late night, and we're looking at CCIV, and we want to run the wheel strategy on it. Okay, so if you look at my last video about the wheel strategy, we did it in Palantir. I'm currently still that trade is still open, and we're still doing it. And I'll link to that video above somewhere, left or right, top left or right, the Palantir wheel strategy. So let's do a little recap of what some of the criteria that we need to run a wheel strategy. So one of the first ones is, are you okay owning 100 shares of this stock? And the answer for me is yes. I think this company is a good company and could see some good upside. Some good upside. So, but in the meantime, in the near term, we have been range bound. Okay, so I would rather, instead of owning stock, I'd rather sell some puts and see if I can collect some premium while this thing is just dead, more or less, in terms of movement. Even though the movement's dead, the premium is pretty high. We have a IV rank of 56, so it's moderate IV rank. So we're getting a little extra premium, which is always good when you're a seller of options. You want volatility and IV to be high. The higher it is, the more money, the more premium you collect. So that's pretty cool. And my first CCIV video, I actually talked about the VWAP, okay? And I'll link to the VWAP video above, left or right, above. And something I haven't looked at CCIV in quite some time in the last couple of weeks. And in that last video, I pointed out how the 27 level, where the VWAPs converge, is definitely a point of interest. We had a false breakout above that, and since we've been below. Okay, so anyway, that's just something interesting to observe. So anyway, so I ended up selling the 21 put. Okay, and the reason why I chose 21 is because because I'm cool with owning CCIV at 21. And based on, it's at the very bottom of this Bollinger Band channel and sort of at the bottom of this range bound channel. So if we do hit that, I think if we do go below 21, I think eventually we'll get back over 21. And if we never touch 21, I'll collect my premium and I will continue to sell puts. Okay. So this is what the premium is. I got in a little bit. I got in for $1.60, 160 cents. And this is only a month of premium. So expires 8/20. And one of the reasons why, my battery's getting low. Let me pause this real quick. And one of the reasons why I think that the IV is so high is because tomorrow is the estimated time where the merger between CCIV and Lucid Motors is going to happen. So I guess the market doesn't really know what's exactly going to happen. So there's a lot of volatility anticipated. So my guess is I honestly think that the stock really isn't going to change much. Maybe it'll go up to the upside, but I don't really see it going down much further. I could be totally wrong, but it just, there hasn't been much movement. I don't really see why it would just crash. But I could see why it would go up because people are just sort of waiting for this merger to happen. So that's just a hunch of mine and not really rooted in any real scientific knowledge or anything, just a hunch. But yeah, so that's it. So let's just a little bit more recap of the wheel strategy. So if we don't get assigned puts, if we don't get assigned the stock, our put expires worthless. We collect that full premium. Okay, $1.60. We take the premium. If we want to continue with the wheel strategy, we sell another put. Okay, if let's say we get assigned. So let's say this goes to $20 and we get assigned 100 shares at $20. Okay, so that would be $2,000. We own the stock for $2,000. But what's good about that is we get those shares minus the credit received. So $2,000 minus the credit received, which was $1.60, is going to be if I can't really can't really type here. 2,000 minus 160. It's going to be like owning the shares for $1,840. Okay, so we reduce our cost basis. Okay, so once we get put stock, what we do is we turn around and we sell a call above that, so it turns into a covered call. And I'll probably do that at about the 30 delta, whatever that is, in a month out. Okay, so what happens is if the stock stays underneath our call, we receive the premium of the call, and we sell another call. Okay, until our options get sold off if the stock goes beyond the strike of our call. And at that point, we sell 100 shares. Okay. So what's great about the wheel strategy, and it's something I haven't really done until recently, is it's a framework to buy low and sell high. It forces you to buy low and sell high. And in the meantime, you receive credit premium. And so I think that's a pretty powerful thing. We'll see how this works. I'll keep you updated. I'm curious to see what the IV rank is going to do after the merger tomorrow. So we're at 56. I think we should see maybe a decent vol crush, and therefore the premiums on these should drop. So we'll see what that does. Anyway, that's it. Hope you enjoyed this. Like and subscribe if you're enjoying this stuff. And I'll keep these coming. Peace out.